Hello, I'll be walking you through this new revenue recognition principle, and this is a case prepared for Stone, and it's prepared by Giant Game and MG&E Accounting Consulting Group. The Stone case. So the contract is for Giant Game, which is a marketing company. This is the contract and how all should be allocated to the contract, and we will be helping Gigi allocate all the transaction prices and all the revenue using this new revenue recognition principle standard. The new revenue recognition principle FASB 606 is to better depict the transfer of goods and services to customers in the promised time, while also reflecting the consideration that the entity is entitled to. It is established by the Financial Accounting Standard Board and the International Accounting Standard Board. This is a 5-step model which will be talked about in the next couple of slides. The first step is to identify the contract with the customer. According to FASB 601-1025, Stone has a verbal agreement with Giant Game based on an unsigned quote to Stone for one TV commercial, one app, and a Facebook page. Gigi has verified via credit check that Stone has the ability and intention to pay Gigi for goods and services transferred. The second step is to identify the performance obligation. According to the new revenue recognition model FASB 606-1025-15, it states that a company can construct or develop an asset on behalf of the customer. The revenue should be recorded after the service is performed. One of the services done will be the creation of a TV commercial, which independently will cost $1 million. The other service is to build the building of an app, and it costs $500,000. This app will help users navigate freely, and the younger, the new, and the existing customers will benefit from the easy navigation of the app. There is also another service for Stone Company, which is to make the Facebook page. This will cost $250,000, and this will help promote the app and will give more information of the new image of Stone Company. According to FASB 606-1025-16, in a contract there are also promises that are implicit. That is, Gigi will be granted a bonus of $250,000 if the app is downloaded 500,000 times in a month, so we have to make it easy and fast to reach the goal as well. The third step is to determine the transaction price. The transaction price must be determined according to the terms of the contract, as defined in FASB 606-1032-2. The transaction price is the amount of consideration to which an entity expects to be entitled in exchange for transferring promised goods or services to a customer, including amounts collected on behalf of third parties. The consideration promise is a contract with a customer may only include fixed amounts, variable amounts, or both. The agreement between Stone and Gigi expects to be entitled in exchange for its promised goods or services. The normal price for Gigi's products totals $1,750,000, but Gigi offers a discounted package deal. FASB 606-1032-6 states that the promised consideration also can vary if an entity's entitlement to the consideration is contingent if the occurrence of or non-occurrence of a future event. According to Gigi's principal strategy, a customer purchasing all three items together does so at a discounted price of $1,500,000. Gigi does not expect their app to reach this point of the bonus compensation. As such, FASB 601-1032-8 states an entity should estimate amount of variable consideration by using either the following methods, depending on which method the entity expects to predict the amount of consideration will be entitled. A. The expected value. B. The most likely amount. Given this bonus is a binary outcome, the most appropriate method to account for this is the most likely method. The most likely amount is the single most likely amount in a range of possible consideration amounts. Gigi predicts the most likely outcome is less than 500,000 downloads in a month and therefore zero bonus. The final transaction price is $1,500,000. The fourth step is allocate the transaction price to the performance obligation. The fourth step is allocating the transaction price to the separate performance obligation. According to ASC 606-10-3240, an entity should allocate a variable amount entirely to a performance obligation or to a distinct good or service that forms part of a single performance obligation in accordance with the paragraph 606-1025-14b if both of the following criteria are met. With this step, we must found the prices of each individual service provided and allocated to the obligation of the contract with Stone. Gigi will use each service product's relative fair value, which is the company could sell the goods or services in a standalone basis to come to the transaction price. To allocate the transaction price to each specific performance obligation specified in the contract, we must divide the original cost of each individual service product by the sum of our services products, which will give a percentage that we multiply by our discounted price. Once we get the individual prices for the multiple obligations, we can determine which accounts to allocate the revenue to. For the TV commercial, the price will be $857,143. For the app, the price will be $428,571. And for the Facebook page, the price will be $214,286. The fifth step is to recognize revenue when the entity satisfies a performance obligation. This is the last step in the new revenue recognition standard. In this step, revenue is recognized when a company satisfies a performance obligation when the customer obtains control of the promised good or service. And according to ASC 606-1065-1, indicators for control are when the company has a right to payment for the asset, the company has transferred legal title to the asset, the company has transferred physical possession of the asset, customer has significant risk and rewards of ownership, customer has accepted the asset, revenue can be recognized at a specific moment or over a period of time. For the case of Gigi, revenue will be recognized over a period of time as different services of creating a TV commercial, building an app, and building up a Facebook page. According to the ASC, for each performance obligation satisfied over time, an entity shall recognize revenue over time by measuring the progress towards complete satisfaction of that performance obligation. The objective when measuring progress is to depict an entity's performance in transferring control of goods or services promised to a customer. So if Gigi decides to transfer the control of these services immediately after completion, the revenue will be recognized at 3 different points in time. Revenue for the Facebook page will be recognized in 2 weeks. Revenue for the app will be recognized in 3 months. And the revenue for the TV commercial will be recognized in 6 months. Thank you.